You got Jack in here.
Good evening, ladies and gentlemen. This is Clearly Say Trading Frank. Exhausting week, and it's only been Thursday. It is approximately 8:10 p.m. Eastern Standard Time on January 3rd, 2019. We are just starting off the new year. Full disclosure, this is purely for financial education, not for any solicitation or advice. Hopefully all of you can see the screen and listen to my lovely voice. We have two great loyal members, and it actually in the given the circumstance of the market, I don't expect too many people involved. But the fact is that anyone can listen to this video, which is going to be very important and to the point, all about technical levels and what markets can do. Remember, our emotions mean nothing. It's only about the numbers and the lines and the levels that matter. And I'll share a couple of my thoughts on what's going on, and we'll go from there. We have two great members. We have Jack. Jackal, can you hear me?
Loud and clear.
Oh, I love that voice, man. That's a Hollywood voice right there. A Hollywood doggy voice. Tom, meet a new member and turning out to be a very good friend, Jackal, right there. And I have my friend Swimming the Market, Tom. That's his nickname for the trading thing, Swimming the Market. You know, I can't, no one can replace that handle. And we have Jack right there. So Tom, say hi to Jack.
Hey, Jack, I've seen some posts on you. Looks like you're doing great.
Jack is a hardcore nut with a soft heart, and he loves doggies, and he's a patriot, and that's all that matters to me. That's all that matters to me. Okay, before I get too emotional and soft, let's get down to the markets. All right, let me start. So first of all, guys, anyone's going to listen to this later on. I don't need to tell you, this market is nuts. But in between the nuts and the bolts and everything that happens, we are still moving along. It is not a straight line market. It's a very algorithmic market, as you can all see, and I will highlight with my beautiful highlighter here. This started off in April of last year, and this was 2018 right there. It started 2018. And this is what's happening. And this is what's happening since the 28th of December, just a couple of days ago. And in between all this volatility, one thing that has changed completely is the market is not monolithic. It means it's not a straight line up. It's not a straight line down. And it's been like that for a long time, but more so right now, in simple English, things don't always move in one direction. Not all things move in one direction at one time. Yes, we do get days when all Dow 30 stocks are up at the same time, and all stocks are moving in tandem because the market's up 400. Now it's more selective. So the key thing to this session is we have to be selective. I try my best, as you all know, 24/7 to find selective alerts, and in between bad days and good days, like my good friend Jackal liked one of my comments, it only takes 1 to 3 stocks to minimize your losses and your pain and just run with it. Now, they're not going to go up in a straight line, but they'll be bright green on your screen. And that's just the way that's just the way the market is. Volatility is the new normal. Look, pretty much everything that I talk about and say are echoed by a lot of these big shot guys on CNBC and all the financial news channels. It's a fact. I said Netflix might be a candidate for for an Apple buyout, and what's his name? Who was I forget the name of that. Meeks. Meeks. That's his last name. One of the biggest internet analysts from the 1990s said the same thing about half an hour later. Now, does that make me look really smart? Yeah, it does. But at the same time, I believe that's something that might happen. Might happen. Apple needs an extra stream of revenues. It's called marginal supplemental revenues. Marginal revenues. And I asked my son, what do you think Apple's going to buy? So he just scratched his head. Dad, stop being a nerd. Like, I'm just trying to eat my little beef brisket on the dinner table. And I said, no, think about it. Something you watch all the time and something that you'd like. So he says Adobe, which one of my members put out. And I said, well, kinda, but Apple's not into the graphic design stuff. And then he goes, Netflix. I said, yeah, now you're thinking right. So do I think it's going to happen? No. But what else happened today? Market's down freaking 700 points and Netflix is still up. At one point was up 4% and ended the day up 1.32%. So something's going on. So selection is key. I am not a genius. I am not a somebody who reads a crystal ball. I know exactly what company is going to get bought out. If that was the case, then I would have bought Celgene like inside out. But we did catch a couple of buyouts over the past couple of years. Juno and a couple of others that doesn't come to my mind right now. But we did get those buyouts. So, couple of broad points here. Good points, all right, guys? Oh, guys and gals. We're going to get a lot of takeovers and mergers, M&A. Coming back from our Wall Street days, mergers and acquisitions and M&A investment banking where the big money is, all right? And there is going to be, given the distressed prices on the markets, as I flick through the charts, which we're going to go through, we are going to get a whole bunch of takeovers and M&As, mergers and acquisitions that's going to take place within the next couple of months and the next couple of weeks. Question is, do we have exact signal which ones they are? Nope. Can we have a small position on each one of them? Yes. Arconic, which is the weirdest name I ever heard in my life. And that was a good old, I believe that was aluminum company of USA, Alco. Now it's called Arconic. One of my neighbors is actually the human resources director for Arconic. It's a very pretty lady driving her Mercedes SL55, and she works for Arconic. I said, what do you do for Arconic? She goes, I've traveled around Detroit and everything and all these different parts of the world, and I try to hire talent. I'm like, great. She's like, I hate flying on planes. I'm like, okay. Well, I used to fly on planes a lot way back in the days when I had to travel and meet my clients. And I wasn't like some sort of really big shot, but still meet my clients in different parts of the U.S. and in Europe, primarily, way back. And so there's Arconic. That is looking for a private buyout at $22 a share, and it's sitting at $18.43. We have the 19 calls. I will flip the calls from January 18 to February as long as the deal dries out, because deal moves on, because I know, well, I don't know, but I do feel it might happen. So those are big winners. You buy these calls at like 70 cents and boom, you're at $6, $4, and you're like, wow, I'm a genius. It's happened before. It can happen again. That's just the way Wall Street works. So while I toggle around here with the S&P 500 futures chart, just want to give you a broader point. So let's talk about risk in the market. We already know them. China trade wars, the Federal Reserve going bonkers, which ain't going to happen on rates, China slowdown, housing slowdown, U.S. market housing slowdown, very, very important. What else can we think about? Oh, Europe slowdown, European growth slowdown, which affects everything from our exports to everything else. So we already know all that stuff. Oh, let's face facts. Charts were working fine. Reflex rally, and then comes Tim Cook and Apple. They blame it on China. They blame it on everything. Guys, if everybody just got rid of their Samsungs, which I said many, many months ago, and just bought Apple iPhones, it doesn't cost much. I have the most expensive Apple iPhones, the XX Max, the i8 Plus, and do you think I pay the whole thing right away? No. I put it on Verizon, I pay monthly installment. $40, $50 a month. Anyone can afford it. But no, people love these Korean phones. Look, I'm not a racist. I'm not like some sort of hardcore, like hardcore right-wing nationalist. Even though I am a nationalist because I believe in the USA. I always said, dump the Samsungs, buy iPhones. It's not just a phone. It's a universe. It's a whole complex ecosystem of apps and all the great things that happen. So people didn't do that. So now they suffered the fact that Apple cut their earnings. And they're very conservative with their earnings. They cut their earnings based on their China sales, which were growing at 18% a year. So who's to blame? All of you guys who use Samsungs, or Samdungs as I call it. That's serious. What's so great about a Samsung? Always got a beautiful screen. So what? I have the Apple XX Max right in front of me. I'm looking at it. I'm checking my Twitter. I'm checking everything else. I'm checking adoption dogs. We miss our beautiful little doggy, Polo, the fighter, right? So it's a great screen. So why not buy USA and buy an Apple iPhone? That's serious. But no, some people are, no, I'm going to stick to my Samsung. Well, great. Then suffer the pains when Apple lowers the numbers. Because they're a decent American company which doesn't lie. Most Chinese companies, and I'll be straight out, lie. They lie on the numbers. China's a great country. Got nothing to do with it. What I'm talking about is business. But they lie about the numbers. The advantage they have is 2 billion people. And if we had more kids, I only have one son, so I'm guilty of that too, is the fact that we don't have demographic strength. Demographic strength means that people get older. People make more money. They move up the economic chain. They buy more things. End of story. Dump your Samsungs and Samdungs, as I call it, and buy iPhone. Apple's numbers will go up. The markets will go higher. I know I sound stupid. I never said I was smart, but that's just the way it is. I'm dead serious. So, moving on, Apple was only 90 to 140 points on the loss on the Dow Jones Industrial Average today. The rest of it was the fear of the China trade negotiations, which I believe President Trump and his team are doing a great job on, falling apart. Kevin Hassett, his economic, he's a very decent guy, makes a stupid comment that all American companies will suffer the trade war and the China slowdown deal. Not a comment, not a good comment that the market wants to hear. And by the way, this is not just about the market. This is about the average American mom and pop whose 401ks are now getting slaughtered. Remember a bunch of years ago when they said a 401k was a 201k? Well, we don't want to get there because that's when my party, the GOP, Republican Party, gets completely decimated. And the Democrats, not everyone's bad. We're a democracy after all. But the hardcore left-wing Democrats take power. Is that what we want? So that's really what's happening. You cannot make those stupid comments that everything is going to fall apart before it gets better, because no one wants to hear that. And the last thing anyone wants to hear is Wall Street, financial markets, and mom and pop. Doesn't matter what political affiliations they are. So saying all that, there's a lot of hope. And that's what we're going to go through in the next couple of minutes. First of all, we have a major technical breakdown. On the longer term charts that you're looking at, which is the daily, and I'm going to show it to you. Because what I do is I immerse myself, and I've been doing this for years, as my good friend Swimming the Market, Tom, knows, and I mean a good friend, knows. I immerse myself in deep technicals. I have no time to cry and swim in the sorrows of like, oh my God, the market's nuts. What's going on with my life? This and that. I manage my trades. I'm playing small. I'm taking profits along the way. Jackal asked me the other day, I couldn't answer back right away. Wow, what's your swing trade time frame? Because I said take partial or full profits on 20% as things moved along. Because it depends on the size of the money that you put in. And I'm not saying I'm taking everything out. I'm simply saying take a bunch out when it looks really good. Write that down. Take a bunch out when it looks good. Or when you're starting to feel too good. This market is not about a feel-good market. This market is about excruciating, hardcore 500-pound bench presses where your muscles and your brains are exploding. And you're like, I can't take it anymore. And you want to do like 10 reps. You can only do 3. So let it go. So even if you do 3, let it go. Take some of the profits down. Feel good. Always have to have cash on the side. That's the biggest problem we all have. We never have enough cash on the side to take advantage of every position that is looking good. Because in every day, when the markets are down 700 points, there is always something in the green. And I screenshot my screen, which I will show on the next webinar. There's always something in the green. Today was Netflix, NBEV, GE, Regeneron for a good part of the day. That's trading. So what it really comes down to, guys, is guys and girls, is this is a real trader's market. I know everyone wants to hear some good soft words and good things, but no. I'm not going to bullshit you guys. This is a tough trader's market. And if you can survive this market in between huge losses and good gains, you will make so much money going forward. It's not even funny. Because these are the markets that separate the men from the boys, the old saying. Okay? I'm not being politically correct, but that's the old saying, right? Men from the boys that ever was. Am I going to say that volatility is going to disappear? Nope. Is it going to be this extreme? I truly believe, given my experience in the markets, given my experience on Wall Street, the volatility is not going to be this extreme going forward. Now, what that going forward is all about, I don't exactly know. A lot has to depend on the macroeconomic situation, the China trade deal, something that we don't talk about that much in the last couple of days, Brexit. If England completely has a hard Brexit, as in removal from the European Union, the markets are going to take a huge tumble. If Jerome Powell is as idiotic on his statement like he did the last two times, the markets are not going to like it. I don't think he will, but then I don't sleep next to him, right? So there are a lot of risks, which we understand. Now, the flip side of the coin are the white swans, which are and again, not a racist statement, but the white swans. There's the black swans and the white swans. So black swans are unquantifiable risks we don't quite understand, like Apple warning all of a sudden on a CNBC frigging interview. Come on. They could have laid it down a couple of weeks ago. So that is completely wrong of Tim Cook with the way he did it. The white swans are what can go right. My good friend Tom, swimming the market, knows very well. We always think about what can go, which I will post as one of my, one of those motivational things that I put out there once in a while. We all know what can go wrong. Do we ever consider what can go right? No. Because when things are rough and the clouds are heavy, we never think of what can go right. What can go right is our great president, Trump, in between his stupid tweets, many, many times, is cutting out a great deal with China. He is. Because the presidency and the election is at risk. Nothing makes anyone wake up if you're a politician, if you want to preserve your status. So we have to, or else the hardcore left wing of the Democratic Party. And remember, we are a democracy. There's a lot of central Democrats, for a better choice of words, who are not that hardcore. Remember, I'm hardcore, but I am not an extremist. So we have somewhere along the line, we can meet on multiple things that is great for our nation. Because after all, what is at stake? The United States of America. That's what's at stake. Our democracy. Forget our democracy. Our economy. It's all about the economy, stupid, right? Our economy is at stake. I'm a firm businessman. I'm an ex-Wall Street guy. And I believe the American business, which is a fact, is what determines the fate of America. You can scream and shout, wave your flag, but if American business is faltering and dying, you do not have the muscle to fight anybody. Face it. You don't have to like what I'm saying, but it's a fact. So American business has to be happy. The Trump administration business policies have made them happy, but they are not happy with the fact that this whole economic situation with China, with trade, with farmers hurting, is doing anything for our economy. And if our economy is not making money, trust me, you can wave anything you want, scream and shout, it's not going to work. So, on that note, we know the risks. We don't know what the good rewards are. And that's the reason why I do intraday shorts. I don't go that crazy because I know in my heart, and I've been right so many times before. Remember, no one loves a loser. Whether it's your wife, whether it's your husband, your boyfriend, or your girlfriend, or your, well, dogs just unconditionally love us, okay? And cats, or any pet that you have. Well, I don't think snakes really love us, right? Is the fact that I just lost my chain of thought. I always do that in the middle of this of these webinars because I don't have scripted things written down. The fact is that that one way or the other we're going to work it out. It's going to happen. It's going to happen. No Dems, no hardcore Tea Party, no hardcore nothing. It's going to happen because we have to live in one nation, United States of America, which we all love. As patriots, if U.S. business doesn't survive, then we're done. We're done. We're relegated to the heaps of the garbage. I'll say it like Congo or some other Venezuela and all these socialistic hardcore economies. All right, enough of my talk, guys. I know you guys are bored of me. You know, sometimes have a beer with me and you'll know how I think. All right, let's move on. Let's look at some charts here. So first and foremost, let me show you the, let's move on to look at, let's look at the weekly. And here's something I want to put down very simply. I'm putting a lot of comments down on the real-time Twitter feed. It's a running commentary on the market about exact levels, not just trade alerts here and there, day trades, swing trades, and stuff like that. Please read them. It's going to help you. It's going to help you really master the mechanics of the market. The market, in some ways, is run by complete machines which are running E-minis or S&P futures. The ES right now is down 1. When I started this session, they were down 7. Does it mean a crap? Nothing. But follow the charts, follow the levels. It takes many years. I am still moving along to be a mechanical robot when you're trading and understanding the market. Forget the garbage that you hear outside. Not that you have to shut the TV off. But I'm going to say New York style, fuck the news out there, okay? There's a lot of, they are all misinterpreting the information. Like we used to say on Wall Street, when I was like one of the top 5-7 guys on my firm. Okay? By the time they say it, we already made it. They are reporting after the fact news. They're trying to decipher this thing. Doesn't mean everyone's stupid. Stick to the charts. Stick to the charts. My mission statement is really simple. Try to be as robotic as possible. And I don't care who likes me, who leaves me, and how many members we have. If I can help one member if I can help 5 members or 10 members move along with what they're doing, at least understanding the markets in between losses and really moving along, and they come back to me 3 years from now, 2 years from now, which many, many, many have, and said, man, you really taught me something. That's my salvation as a service. Because I said from day one, and that's the last thing I'll say, I never once run a trading service. I didn't. I have 33,000 plus members, followers on StockTwits. I don't even post there once a day. Maybe once a day I post there. I don't give a hoot. Because personal responsibility. So that's it. All right. Enough of my diatribe. All right. So here are the levels. I mentioned that before. So if you look at the candles, start to get to know the candles really well. This is going all the way back to 2016. And it's very simple to read. Right there. If we lose 23.97, we're going to fall really fast down here. We're going to lose about 80 points. That's almost 560 Dow points, and it's going to happen really fast. Right there. If you want to know how I draw these lines, sign up for ACS. I'll be more than happy to spend my weekend mornings or weekday evenings working with you. Right now we're here. That's the other level we have to watch out for, which is 24.48. I don't draw these lines randomly. This was where the big, a sharp rebound happened, and that was on the 17th of December, right there. Remember, it's a weekly chart. So given where we are right now, look in the futures right now, almost going positive. If we break 24, right there, this line that I highlighted and posted on the Twitter feed, private Twitter feed, 24.43, feel free to go short for about 24 to 48 hours. You're going to make a lot of money. This was looking as a doji. Right now, it is a not necessarily an inverted hammer, but a somewhat of a bearish candle. It is still an inside candle. And please, on your own, study the dynamics of candlesticks. I self-taught myself. I have a great video on it, but I am not the master of teaching you about candlesticks. So please, go on YouTube, type in candlestick tutorials, and learn on your own. My job at Clueless Day Trading is to show charts, not to teach you, unless you're an ACS student, about every aspect of candles and all that stuff. So this is still a inside candle, very much so. The reason this line is drawn is because below this, we are going below the 50% FIB. So that causes more, and you know Fibonacci retracement's by now, causes more selling pressure. And that's what we are doing. Okay? So this is not that bad yet. The body of this red candle is still within the very large body of a big reversal move that we took full advantage of. And whoever didn't, well, time to move on. Time to grow up. Like my new thing in motto in 2019, time to shed the diapers and wear the pants. Time to call mommy all the time and just get up and wear your pants. This was a huge reversal of 2300. We had a 1700 point rally, and this is what we're giving back right now. Have to look at these things from a longer term perspective. Okay, let's move on. So, next thing I'm going to show you is the daily. So here we are on the daily. And these are things that keep you in a trade instead of freaking you out. This helps you with dollar cost averaging. Buy something at 4, it's down to a buck or two. You buy a little bit more. But the only way that you have the confidence to do that is if you follow these charts. It's not going to feel good when you have something at 4 and then now it's down at 2, 50% down, or maybe 60% down. But if you follow the chart, it's going to give you that level of confidence. So what gives you that level of confidence? Well, this is what gives you the level of confidence. Please look, it's not that hard, okay? We have a full stochastics crossover starting on the Christmas Eve massacre, which I will repeat, and I'm not some conspiracy theorist, okay? Was a direct attack on the Trump presidency and the business policies of the United States of America, coming primarily from Europe, in my opinion, and dogmatic U.S. hedge funds who never believe that we can move higher. It's been the same story since 2009. It's always blah, 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 blah. The Fed is bad. The government is bad. We have too much debt. Companies suck. They're just blowing up their numbers by doing buybacks. Blah, blah, blah. That's why I'm an economic nationalist. I sound like Steve Bannon, right? I don't even like that guy that much. So, there you go. So, let's get back to technicals. Look at this, baby. We are still a crossover up. We're still moving up. A child can look at that thing. So if that's the case, stick with the long trade. Do some intraday short trades here and there. We bought those calls around a buck, $1.20, whatever. After hours, they went to $2 and change. I swept up some. These were the SPY January 4th, expiring tomorrow, 244 puts. You remember that? I put that out there. As a trader, if you're sitting in some soft cushion with your nice, hopefully, Apple MacBook, which by the way, I have to make a confession. I have no idea how to use a MacBook. Terrible. The day I learn is maybe when Apple goes up like 900 points. But you're sitting with your fancy laptop and you're like, oh, I'm going to put in a trade. Oh, currency trading is putting it out there. Well, it doesn't work like that. You have to know what you're doing. A stupid trader just running off alerts without looking at charts is never going to make it. Many traders do, by the way. Just looking at my alerts and putting it through, and boom, it goes up or goes down and they make money. But that's not the way to consistent profits. Consistent profits overall, in between big losses and big gains, net plus gains, is to understand my charts that I put through. Because I work really hard to put these through. And I'm not looking for some gratification like, oh, thank you very much, Frank, you're doing great and stuff. It's always great to get those compliments. I know my good friend Jackal puts a lot through. What makes you feel good and really good, put it through. But you have to be a learner. So learn. Okay. So even though we had this down candle here, let me change the color. Yeah, okay. Right there. Okay. We had a drop down candle. Look at the stochastics. Remember, 99.9% of the technical analysts out there, all these great services out there, not going to name many, some of them are friends of mine, they're always looking at prices. They're always looking at the external. This, gentlemen, is called the external. It's like when you go to a doctor, like I say on my ACS session, and they look at you and say, you look sick, your eyes are watery, you drank too much, whatever. So you are external. So you're not, I know you're not well. You have the flu, so you are not feeling well. Well, how about look at the internals? Internal is your blood work. He takes your blood. He says, come back 5 days later. We're going to talk about what's really wrong with you. Guess what? Maybe nothing's wrong with you. You were just having an external flu, or maybe something is really wrong with you. That is what, in the simplest terms, what stochastics and internals are all about. The Kappa curve. Does the Kappa curve look like it's curling down? No, it's curling up. What is it telling you? On a forward direction, for your confidence, for your management of your trades. Are you buying the dips? Or are you that scared that you're just selling every little small move that's happening in the market? Given where we are right now, you should be buying the dips. Short term, doesn't matter. I don't care if it works over 1 week or 2 weeks. I'm not projecting what's going to happen 6 months from now. We're in the business of making money now because of the volatility. Once things really start to change on the weekly and monthly, then we can say we can hold on to things for a couple of weeks or months. Certain stocks you can, but I'm talking overall market. So far, is everyone with me?
Yes.
MB, you still with me? Mike, you still with me? And Tom, are you? Am I making sense? You still with me?
Absolutely.
Thank you, sir. Okay.
Are you going to look at some monthlies just real
Yeah,
quick?
yeah. I'm going to go through that in a second. Okay.
Okay.
Yeah. And I'm going to do a session on the weekend session. We're going to go over the algo quad charts, which I want everyone to subscribe to by Friday. I'm dead serious, because those are the ones that make me the money every single day, aside from these ones. Okay. So saying all that, this is as good as this is daily. So stochastic is still moving higher. So we're getting these big drops right here. And this big drop was 660 points at the close. Wow! The world is ending. Does it look like that on the charts? No. Honestly. So the first thing I do when I look at the futures at like 4 or 5 in the morning, and before I take my doggies out, one less doggy, is like, let me look at the charts. And you know what it does most of the times for me? Okay, we're gonna be okay. Remember, we're all in the same friggin' boat. My money's in the market just the way your money's in the market. It's not like I'm just sitting there with no money in the market and saying, okay, guys, you gotta do this or that. This ain't a paper trading service. I'm not a paper trader. Right? So no bullshit. Most of the services, most of the time, they're not even trading their own money. They're just bullshitting about what they're saying. I could bullshit all the way long. But I'm walking you guys through every single aspect of it. So we had this big drop here, 660 points. What happened to the internals? What happened to your blood pressure? What happened to your EKG? What happened to your AIC sugar level? Your glucose? Your cholesterol? Nothing. So basically what happened was that you got drunk out of your mind, lost 660 points. You have no remembrance of what happened the day before because you're at a wild party, but your internals, as you know your health, said, it's okay. You'll survive. You're going to be fine. You're going to be alive. Like we see in New York. Dude, you're going to be fine. Kopak, Mr. Kopak, the ultimate thing. saying you're going to be fine. It's not going to feel good for the next 24 to 48 hours, but you're going to be fine. And what's fine? You're going to make a shitload of money if you can scale in, buy some selective issues, or buy the indices like the SPYs and such, and trade intraday for a quick couple of shorts. Am I clear on that?
Yes.
Yep. Can you hear me?
Yes.
I can hear you, Mary. Yes.
Okay, good.
Thank you. So what I'm talking about
Clear.
what I'm talking about is this experience about trading these markets, which I can't fully teach because you have to be in there. So anybody who's in there, and I suggest you do it with small amounts of money, will learn the most valuable lessons that's going to make you, for once I'm going to say it, ever rich. Really rich. Because as you move along, you will move in with power, with extra money. But for now, play with small amounts of money. See that $100 grow to 400. See that $100 go to 300. See that $200 go to 800. See that $1,000 go to 3,000, depending on the size you're trading. Anybody who's making a couple of thousand in these type of markets on an intraday basis, you're frigging nailing it. Listen, I'm not a trust fund baby. I'm a hardcore working capitalist. Okay? Set your goal. Your goal's not going to be met because the volatility is insane. But you will learn the most from these markets that it will ever teach. Any lesson will ever teach you. What I can teach you. What I share with you comes from my heart. Okay? So, did anything change internally? Nothing. So what's all the big fat 660 point drop and Boeing drop 14 points all about? A buying opportunity, in my opinion. Am I going to be right? Most of the times I've been. Am I going to be wrong? Maybe. Am I going to be very wrong? Nope. Futures are up 2 right now. They were down 7 or 8 when we started this session. So let's move on to what my good friend Swimming the Market asked me. The month. Let's look at the month. The monthly is very hard to read. So I'm going to give you the good and the bad. The monthly says, looking at the candles, the externals, the flu, the watery eyes, the hangover. The best movies made ever, right? It was, we are going to 2360. So you could always have some money out there buying some far dated, maybe a month or two out puts to hedge yourself at 2360. Because the candles certainly don't look good on the external. We see that. I was right on the falling wedge and the big move up, and this is happening right now. Remember, a lot of it has to do with the macroeconomic stuff that's happening out there. What our good friend Donald's going to do. China is already freaking out. They're going to loosen their lending standards. They're going to pump up their economy. Remember, the Chinese government is a very smart government. We all have Chinese friends and stuff. We're not a bunch of racist schmucks, right? We're not. America was not built on racism. It was built on equal hard work, responsibility, and capitalism. They're going to do what they need to do. We need to be smart. So that's your external. That's what it's looking like. That's a pretty big drop right here from here. It will happen fast if it happens. Let's look at the internals. The internals are really deep oversold. So, Mr. Tom, Swimming the Market, my good friend, We are approaching a very critical level. This dotted line is not made by me. This is system generated. It is showing 2107. We're almost there. Can we slip and slide and go all the way down to 2009 levels, which was a generational buying opportunity, which I bought it little. I was still on Wall Street. I wasn't a professional trader. I couldn't really trade actually that much other than my personal account because we were on the institutional portfolio management side. So compliance said, you can trade. But imagine if I put $100,000 here. Within a month, I would be at 300,000. And if I left that 100,000 on March 9th, so remember the day, 2009, all the way up to President Trump's election and the huge rally that ensued, that would be almost 3.5 million. I left Wall Street 2010, somewhere around here. October. Oops, let me get this right. Guys, listen to this carefully, because what we are seeing is a generational opportunity of what's happening. I left Wall Street around this level. I worked for a hedge fund for about a year. Made some decent money, but they were a bunch of schmucks. They didn't understand anything what I was trying to do. I went on my own on 2011, and Tom remembers that, around here. I'm sorry, 2014 I started the service. Wow, 2014, yeah, because I never wanted to start a service to start with, around here. Okay? Look at the market. You could have put 100,000 here or 10,000 here, and you would have made 350,000 and $3.5 million. This is unprecedented. Okay? And once we get down here, if we get down here, which we did, it's going to be another generational buying opportunity. Actually, it's down here. Listen to my past video, which is mostly around 2,200. So the point is, the bull market as we know it is not broken until we hit 2,200. Now, along the way, will it get there? I don't know. If we keep on screwing up on our trade policies and everything else, and the Dems really attack and block everything that comes along the way, which could help the U.S. economy, yeah, we could get there. So that's your monthly, Tom. All right? But
Thank you.
But saying all that, we can rely on the monthly for our daily living. So if you're relying on the monthly, you better be pretty convicted that we are going to get to those levels right away. There is no technical chart, even my beautifully drawn technical charts, which tell us that's going to happen. Because we are at a very critical level here. Do I think we're going to get down to 2009 recessionary levels, which is Stowe's at minus, look at the number, at minus 1.16? I personally don't think so. I think we, somewhere along here, we are going to kind of like waddle around and then bounce. And remember, these bounces are worth hundreds, thousands of points. So far, the monthly is still showing down. Let's look at the weekly, because that's important. So here's your weekly. The weekly chart is far more constructive. The crossover up is still intact, even though the downtrend line, remember, when I draw a line, I just don't do it because I'm like brinking on the job, and saying, oh yeah, I'm just going to draw a line. This line was drawn to show that that's what the resistance was. And guess what? That's exactly what it was. Some of you who are into my charts, like Jackal, like Tom, and a few other people, and some of you are getting into it, understand the matrix. They are very, very accurate. Look how closely it hit that and pulled back. But overall direction is still higher. That is a falling wedge. That is what President Trump should look at. His presidency is a falling wedge at this point, which means it's going to break out. And it sounds funny, but that's the way it is. Okay? This is a falling wedge. Now, unless it completely collapses down, which means we are going to hit 2400 and possibly lower, this most probably will break out. So you have to be prepared. Simple. Everybody knows the risks. Nobody knows the rewards. Therein lies those 1,000-point rallies that ensue, and most people, majority of people, totally miss. I'm doing pretty okay. Every day I'm trading some things. I got hit on Apple. I'm not going like nuts. I'm not putting like $10,000 on options trade on Apple Lottos. I'm winning. It's a fact. I'm showing the wins. I won so big on Netflix, it's not even funny. And I really hit the pedal to the metal on Netflix, on Lottos and options. And on Chipotle. Figure 50 cents call went to $1.20. I sold that mostly around $1.05, $1.10. How would you like that in the middle of a market down 660 points? Wake up, kids. Seriously. All it takes, like Jackal is one of the few great members who liked it. You only takes 1 to 3 stocks to make your friggin' day. I won on Regeneron, even though it was down at the end of the day. And I have a bunch of these little biotechs, wish I had Celgene, that are doing fine. I keep on buying NBEP because it's a long-term buyout M&A play. I keep on buying Tilray overall because it's a great company. I'm not even a pot smoker. Could probably give me a headache. And you guys wouldn't even see me because I'd be just like, throwing out things. Maybe my charts would be better. That's it. So the weekly is good. This is still a very inside candle. Remember the follow through day, which means 1, 2, 3, 4. So how about follow through weeks? First week, second week, whatever the third week is, the fourth week has to be green. That means we are going berserk higher. Will it happen? I have no freaking clue. I'll simply keep on relying on the stows, which are still looking good. That is a falling wedge. Now, before I go any further, I will tell you that anybody who takes the time and patience during the day or end of the day, looking through my commentary and the comments and the charts and all the hard work that I put in during the day, will have no need to listen to my webinar and my voice. The whole commentary is put there. Let's take a look. We look at the monthly. Let's take a look at the Dow. This is Dow Jones Industrial Average on the hourly. which is more, short term. At this point, this is where we are. Does it look like a complete disaster? In my opinion, no. A complete disaster is when we break below 22,259. You can see that right there. Can we bounce from here? Absolutely. Is the 50 fib going to be recaptured? Absolutely. It will. Now, whether you like the Democrats or not, one of the things that I put out there is market positive. They're trying to put a ceiling on the overall budget deficit, debt ceiling. Okay, you saw them on my Twitter feed. Remember, my Twitter feed is about having you guys educated. Education doesn't mean you're going to make more money, but you're going to make more money in a more systematic way. Okay, so the last tweet that I put out there, it says the House is resurrecting a bill that would prevent a debt ceiling breach. Very, very important. The bond markets don't like the debt ceiling being breached. Okay? It's nothing to do with Donald, nothing to do with Pelosi, but that's a smart thing to do on a fiscal standpoint. You don't want to go nuts on your credit card just because you're feeling good. Or you want to impress your wife or your boyfriend or whatever, your partner. So I'm going to go spend $5,000 on that, Armani, Gucci, Dolce Gabbana, handbag. No, you don't want to do that. Okay, so that's a good thing. So saying all that, this is the level that I'm watching, 22,259. And if we do break that, then obviously we are going to retest the lows. Now, let me clean this out. Netflix. Let's talk about one selective stock, and then I'm going to take a couple of questions. It's a goddamn good-looking chart, whichever way you slice it or dice it or whatever you want to do with it. Here's a couple of things I like about Netflix. I've been paying for Netflix, whatever, $10.99, $11.99, $12.99 for years. I finally started watching Netflix. Like, god damn it, there's some great shows. I'm not talking about Narcos. I'm talking in general. Amazing documentaries, because I'm kind of a nerd. Great shows, like, wow. And I'm thinking to myself, and I'm not talking about Bollywood films in India and stuff like that they're expanding into, which is big money. But look at this chart. It is on a complete uptrend overall. Even if the stock falls down, this is how you have to be a trader, to 266. This is a full-scale uptrend that does not end till the pattern symmetry completion at 280 and a channel completion at 290. End of story. You have to be selective. And this is a major internet stock. No exposure to China. Complete expansion. We don't know what the earnings are because half the analysts are dead wrong on it all the time. By now, you know what these analysts are all about. They love something when it's going higher. They hate everything when it's going lower. I love this trade. It's been making money for us. All the way from 230 plus. So if you want to freak out every time you get a red candle, well, that's your problem, not mine. Because I'm doing real good on this. On that note, I'll look at any chart any of you guys want. We have, it's 9:14, so I have 15 more minutes. I don't want to make it too long. So any chart that you guys want to watch, I have it here saved. So go ahead, shoot. Anyone.
Could you put up Boeing?
Boeing. I haven't done Boeing on this. Boeing's on my quad chart, but Boeing is held hostage to China. You understand that part, MB, right?
Yes.
Exactly. Boeing's business will completely collapse if the China deal does not work out. China is the biggest customer. Boeing sells to the world. The two biggest. Who are the biggest customers of Boeing? China and the Arabs. Not all the Arabs. The United Arab Emirates. Okay, so we don't have a problem with them, but we have a problem with the China stuff. Asian companies are buying Boeing, but China is the biggest Boeing thing. So this is the Boeing chart from way back. We've been trading Boeing back and forth. This is one heck of a volatile chart. So Boeing, if you just looked at this candle, is not a good-looking chart. Now this is a daily chart. So is Boeing trying to tell us something that the Trump administration is not going to cut a deal with China? If I was a bear, I would say, yeah, they're not happy. Boeing is not happy with the way negotiations are working. And Boeing is an all-American institution. So this is a daily chart showing you the bigger picture. The shorter term pictures, which we trade Boeing all the time for 10, 15, 20 points, long Boeing at this point, is the daily chart. That's different. I'm sorry, that's the hourly chart, the trading chart. This is your daily chart. So let me explain this to you. Boeing is at a major support level. Now, how do I say it? Because I look at candles. This was where Boeing turned. Went up a little bit. So I would say if Boeing breaks 308 or breaks, then we're looking at 300. The biggest thing is that Boeing's 292 level, which goes all the way back to beginning of the year, is the ultimate buying opportunity. At this point, you have to refer back to my Boeing 1 hour charts that I posted on the Twitter feed for the trading part. If you want to be an investor on Boeing and buy it for longer term, you have to wait for economic policies coming out of the White House, what's happening with China. But overall, this is one of the fastest moving trades that I've traded on the hourly charts. Each of these candles are good for 30, 40, 50% on your money. And at this point, I would be looking at a support level of 307.51 as a major support level. And I don't like the internals overall, given what happened today. However, I will say from an optimistic standpoint that we are still kind of moving up. Now, if I switch this chart to an hourly, 1 second. It becomes far more, from a trading perspective. Remember, there's trading and long-term investing, right? So from a hourly chart, which is the short-term picture, looks pretty damn good. You got a cup, you got a handle, and you got a good move all the way up for 17 points at 327. We are oversold right here. And choose pen color green. There's your cup, there's your handle. As long as you buy it somewhere around the 309, 310 level, put some stops below that level. The stops would be put normally around 307, 306. We could expect, given the circumstances in the market, a bounce up to a 327. Next question. Tom, Jack, what do you see?
Yeah. For a longer term swing, would you consider with the anticipation of the trade deals EEM?
I haven't actually looked at the EM lately. The reason I'm not really I'm not really looking at the EM too much because for two reasons. Back from my Wall Street days, when these managers get too excited about like, oh, we got to put money outside the U.S. And again, this has nothing to do with my political like favoritism towards the United States. They're like, oh, emerging markets, this and that. The only EEM stock. Let me see if I have a thing here on EEM. I should. If I'm going to play the emerging markets, I would be playing certain selective stocks. Of course, you can play the indices. Do I have EM here? I don't. Okay, so I'm going to construct it right in front of you, guys. EEM. Bingo. So looking at the EM, honestly speaking, it looks like shit. Excuse my French, okay? And it really does. And I'm pretty good at reading patterns and charts. US is going to recover faster from everything it's doing and any policy constructive stuff that's going to come out than the EEM. Now the EEM will suffer for two reasons. Number one, the strong US dollar. Even if the Fed says, oh, well, we're going to moderate and stuff like that, and Jerome Powell is certainly not in the business of raising rates after everything that's happened, the global slowdown and everything, I would not be looking at this as a good use of my money. Okay? I believe in simple thing in life. We have a limited amount of money, and we always need more money to trade with, right? So, just pray that I get like 425 million in the lottery, and my favorite members are going to get a nice chunk of that too. So, saying all that, I mean that. So, the point is that when I look at this chart here, you can clearly see here the EM is going lower. Okay? I would rather be investing for better purposes of my money on individual stocks in the US, indices in the US, and if I'm looking at emerging markets, which is EM, I would be looking at individual stocks like Alibaba. I'd be looking at Melli. I'd be looking at NetEase. I'd be looking at things like that as a better return on my money than looking at the EM. Now, saying all that, I just drew a line here, which is very, very important. I don't have the stochastics in here yet, which I'm going to do it right now. Remember, this is not rocket science. It's just fast reading. The EM right now is hugely oversold. Hugely oversold. Stores are bottoming. Huge capitulation volume on the monthly. Remember, this is the monthly. And this is how I read it. I could be drawing a couple of lines here which tells me where I would be a big buyer or not a buyer. 1 second. The overall candles look crappy. I said that's why it looks like shit. But right there. However, we have a level here on the, and guys, you guys can do this at your own. Believe me, it works a lot. We have a level here on the stores which is extremely oversold. We have a downtrend line which should be in red. See how the magic of technical analysis comes in? Which could very possibly create a reversal bounce. You could certainly trade this on a short-term basis. You could certainly trade this on a short-term basis because as the U.S. bounces based on policy stuff and government reopening, which is the biggest catalyst right now on the positive side. The government will reopen. Okay? The government will reopen. They will get a decent amount of funding for the border wall, which really means border security. I don't know why they call it border wall. Okay? And government will reopen. The EM can very easily bounce off this major downtrend line from 2007, 2008. Wow, this is the first time I actually drawn this chart. Thanks, Tom. you could get a nice bounce. Now, for the emerging markets to rebound like that, we need a weaker dollar. That's a currency carry trade. If the dollar doesn't weaken substantially, the emerging markets will still falter. Emerging markets have more debt issues than me and you know about. We have much lesser debt issues. I would focus on US companies, US indices at this point, rather than listening to the self-loathing, US-hating money managers who always want to put money overseas. Jack is asking for Roku chart. Absolutely. So, Tom, you get that?
Yeah, that was helpful because I had seen the dollar chart and the dollar looked to be monthly.
Don't. I mean, look, I'm a pretty simple guy. Don't worry about the EM too much.
Okay.
Focus on SPY. Focus on the Qs. Remember, tech earnings are overall going to be great. The amount of money that went out of Apple today is going to land up in the Netflixes, in the Googles, in the Teslas of the world. So those are where the big money is going to be made.
Okay.
Those companies, and this is from my old days on working on the street and trying to figure out, I was a pretty damn good analyst, picking up the tech companies. Is Apple is not dead. Apple will falter and then find its footing. But at the same time, the money is going to go rotate into the circle of the big tech companies, which are the brand names. So Netflix, even Amazon. Amazon, to me, is a screaming buy because those frigging guys are making money right, left, and center. Right, left, and center. The only thing I have a problem with Amazon, their frigging options are so expensive. I don't feel like buying $9, $10, $11 options. And even if you buy them further out, they actually work. So those, concentrate on that. Amazon is one of my favorites because Amazon has no China exposure. Amazon has huge revenues on the AWS web services. Amazon has big retail revenues, which they're losing money but still making money. That's big. Amazon, from what I heard, and I kind of believe that, I'm going to talk about that, show the charts tomorrow, would probably buy a actual grounded retailer. Guess who it is? Who is the most digital retailer out there other than Best Buy? Target. Okay? Target. Amazon will most probably buy Target this year. So keep on buying Target calls like 6 months out. I'm dead serious. All right? Because Target is smart. Their management is unbelievable. And Amazon's going to buy Target. They need a whole slew of new multi-million consumers who love going to a store. Target's clean. They carry good stuff. They have branded private labels, just like Amazon. They're going to buy Target. So Roku, Jack, is one of my favorites. Primarily because of the chart. Look. Oops, let me change this. I'm going to put black. Remember, every company is a buy at a certain price. Everything in life can be bought, right? Like from the old mob movies. Everything has a price. At the right price, anybody can be bought. Morality or no morality. So every stock, every company can be bought if they get cheap enough. Well, frigging Roku is cheap enough. I've used Roku maybe a couple of times. The device, still have it lying around, the Roku thing. But they are gaining customers. The chart looks amazing. Roku is actually a long-term play. So given the technicals of it, aside from the my quick fundamental basis on it, Roku might even be bought by Netflix. Who wants an extra revenue supplemental stream of Roku customers? All the so-called millennials and decimillennials, whatever the names are, G generation, X generation, I don't know, I'm an old guy. Okay? They're all cable cutting. Anything cable cutting is good if you're looking as an investment. Roku is a trade and an investment. Period. Technically speaking, Roku worked out for us very well over the past couple of days after it went down. Today it went down, thanks to Apple. But look at the technical aspect of it. This is called an inside day. All that hammering. And Roku was still within the body of this beautiful green candle that delivered fantastic results 24 hours ago. Overall, it's going higher. I believe Roku is at 34, 36, 38, if not higher dollar stock. You have to scale in, you have to buy time, and we move on. I bought not only the 32s, I bought the 34s. They were like 20, 30 cents. Keep on buying them. It's my opinion. Is Roku all of a sudden be like, oh my God, we just didn't sell enough Roku boxes? Don't think so. Because it's a completely different genre of generational products. That's the way I used to explain to my clients in Wall Street. Okay? So Roku could be as good as 44. It could be a lot higher. And we have made money on Roku before. Okay? Check?
Yes, okay. Thank you.
No problem. And this one, stick to it. Stick to it. In my opinion, obviously. All right, guys. So listen, I'm going to sign off. Thank you for being here. And most importantly, I want to thank you guys for the loyalty. This has been a very difficult time for a lot of us. We are doing it. I'm a fighter. I never give up. I try to help as many people as possible. And more importantly, just stick to it, man. Because the markets are deeply, deeply oversold. I show you the downside, what can happen. All you hear on the news is a bunch of blabbering idiots who were never there when the markets were cheap and we went up huge. And now they're all there blabbering how the market's going to go down, how Trump presidency is going to go down, blah, 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 blah. I still believe that Trump administration has to be very careful at this point about what they're doing.
Yeah, agree.
For the markets, and not any loose talk. No tweets, just calm down. And I think they're getting the message. And if you want to be an active trader, which has worked very well for so many people, then these are the charts you want to use. That's all. You have to close. If you want to put everything down in cash at the end of the day, forget the swings and everything, do it. Use these charts. Make a couple $100. Make $1,000, $2,000. Make more, depending on how much you're trading with. Which I wouldn't recommend at this time because things are so fast and so volatile because of the news flow. Each one of these candles are dangerous to your health if you're putting too much money in. But just this chart alone, and these type of, look at this, how accurate my charts are. Futures are up right now, two handles, right off my level here. But if it breaks this level in a big way, you can short down to the first level, 24.33. Put in $60, put in $100. I'm dead serious. Double it on a fast move, but you got to be quick. But if you want to be patient and do the right thing, then you have to wait for the levels on the swing charts to go for it. Companies, American companies are the best in the world, guys. Okay? I love Netflix. Maybe they'll disappoint. Maybe they won't. I doubt it. Okay? Amazon, I think, is a screaming buy. Apple, it's going to go through some margin selling. We'll buy it. We'll buy it. Soon. We made money on Apple before. Lost money on Apple today. That wasn't that crazy in it. Tesla is going to fly, in my opinion. They're going to sell. They're going to sell. They're getting the European approval. We've made money on Tesla before. But Tesla, you got to be quick. Booking.com is like one of these, trade by appointment. You gotta buy it and boom. Chipotle, it's going higher. So there's a lot of opportunities. Square, one of my favorites. Square. The guys are payment processing like nobody's business. Okay? Biotechs, selective ones. So you got to be selective, got to be involved, cannot take your eyes off the market. Doesn't mean you have to glue to the market like I am, but you got to be in there. If you're not in there, it's always like, oh, well, it happened. That's not the way it works. On that note, guys, thank you for everything you guys are doing, for being here. Get referrals. We definitely need to get some more new blood in. We lost a couple of people, and I feel sorry for them. I'll be honest with you. I'm a nice guy, but I'll be honest. Weak guys, weak people always drop off. You know, guys who enter boot camp, 90% of them fall out. That's the way it works. Okay, weak traders don't make it. I'm not asking you guys to be aggressive. I'm not aggressive right now, but I'm tactically doing okay. There's lots of kaboom moments that are happening. Not a single person in the chat room. That's fine. It allows me more time to devote on printing the charts. Sometimes in the morning I'm a bit late. It's not because I'm being lazy. It's simply because I'm setting up the charts and waiting a little bit before I'm putting up the charts. Markets will rebound fast and furious in a huge way. Maybe from slightly lower levels for a multi-month rally. But at this point, I don't give a shit about multi-month. I'm talking about multi-days or possibly a week or two when we get these big moves. But nowadays, I'm going to focus on multi-day rallies, intraday rallies, reversal plays, and selective situations. That's all. So please, get those referrals in. God bless you all. And let's have a great 2019. All right, guys?
Okay, Frank. Thanks so much.
Thank you so much. Thank you. Thank you for being here. Bye-bye.